December quarter of 2015 appears to have been a challenging one for corporate India. As was expected, halfway through earnings season, the numbers suggest that metals and FMCG companies have taken the worst hit, while the banking sector could still swing either way.
So far, nearly 25 of the 50 companies making up the Nifty have announced their earnings, and the numbers have thrown out no big surprise. Put together, these 25 companies have reported a 9% growth in EBITDA, a 7.4% rise in net profits, and a 4.7% fall in net sales. This last trend is primarily because energy companies have clocked weak revenues due to the plunge in global crude oil prices. But take a step back and the overall trends hold. The quarterly numbers from 123 of the 500 companies in the S&P BSE 500 index show that net sales are down 3%, while EBITDA is up 8.2% and net profit is up 12.5%. Sector-wise, here's how the cookie crumbles. While top lines in the energy space contracted due to the fall in crude oil prices, margins have improved. For the oil and gas sector as a whole, net sales are down 42.25%, but EBITDA is up 27.5% and net profit has jumped 22% year-on-year. We must point out there that PSU oil companies are yet to reveal their performance, and oil refiners are widely expected to present a good set of numbers over the next fortnight. So that trend could still swing the other way. Speaking of weakness in global commodity prices, the metal space has not had a great time in the quarter in question. Overall net sales are down 37% and EBITDA has fallen a whopping 71.7%. Now the metals and energy sector are not the only ones facing a challenge. In the banking space, only 11 banks have announced their earnings so far, and overall net interest income is up 18% and net profits are up 11.4%. But provisions have jumped 52.85% over the quarter. Again, it's still too early to zero in on a specific trend in this space since most of the results have come from the private sector banks. The bulk of the public sector banks will be releasing their report cards over the next 15 days. One other visible trend so far is the fall in consumption. Essentially, the Indian consumer is just not buying, especially discretionary goods. This is evidenced by the fall in volumes seen across the FMCG space. So despite EBITDA rising 5.1% and overall net sales rising 5.5% in value terms, net profits are down 1%. However, it's prudent to point out once again that only 11 FMCG companies, that's 1/3 of the total players out there, have announced their earnings so far. That pretty much leaves the board wide open. And the remaining results in the banking and FMCG sectors could well decide on whether India Inc. has come through the October-December quarter with just bumps and bruises or with deeper flesh wounds. In Mumbai with Sajit Mangat, Alexander Matthew.